as 2022 draws to a close, we've got Lance McDonald, a senior investment advisor with the Waterfront Group, here to summarize quite a year for the markets.
An exciting year.
Absolutely. So, Lance, how did the TSX and S&P stock indexes finish?
Yeah, there were a lot of ups and downs this year. And even the ups were a little bit painful for people, which is not usually how it goes. But going into the end of the year, it's a good time to kind of reflect on what's happened in 2022 and use that information to make some positive adjustments to your investment portfolio. The S&P and the TSX being a major focus. Barring any miracles today and tomorrow, they're going to post some negative returns for 2022. TSX down about 9% this year in Canada. The S&P down about 20% in the United States. So there's some good news there, though.
What's the good news?
I know, it doesn't sound great, but typically when you've seen these negative numbers, you're in a good position to see some positive returns going forward.
Okay.
Now, the S&P 500 has only dropped 20% or more 3 times in the last 20 years. So that puts the odds in our favor. Plus, if you go back a couple of months ago, those returns were 5% worse than they are today. So we've seen a bit of a recovery since October. So that's enough, even though it doesn't feel like it, things are improving a little bit when it comes to stock prices.
Okay.
Yeah.
So what were some of the volatile assets this year?
Yeah, 2022 saw a lot of people going to things like cryptocurrencies and oil and technology, mainly because they had already had a nice run, so people were attracted to the good returns. And then we saw 2 out of the 3 of those categories have horrible corrections the rest of the year. So it's a good time for people to evaluate that and see if those still make sense for their portfolios. A lot of times people will realize that they don't. They just got caught up into the hype and did something that wasn't really fitting their financial goals. Yeah. And then the other thing this year that was a big negative for people, and I say the ups were not easy for people, it was interest rates. Right. We saw an enormous rise in interest rates, which meant a couple of things for investors. First off, their bond investments did poorly. They had negative returns. And it's been more difficult for people to service their debt. January of 2022, prime lending rate was 2.45%. Now we're at 6.45%.
Steep.
Yeah, so the name of the game there is for people going into 2023, pay down some debt. Take things like cash and high interest savings and GICs that are paying lower rates than what you're paying on your debt and pay those things off.
Is that the main advice for heading into 2023?
Yeah,
planning ahead?
Yeah, for that part of the market, when it comes to the stock side of things, don't be afraid of the stock market. We've seen the big drop. Take advantage of it. If you have cash sitting on the sidelines that came out of the market when things were dropping, it's time to deploy that. Make a good New Year's resolution for yourself to make your finances part of your future planning, for sure.
Thank you so much. Well, Lance,
my pleasure.
Thanks for joining us. Lance McDonald with the Waterfront Group. Thanks for being here.